Hi, this is Sean with Platinum Audits going over a securitization analysis report with the screenshots and the bond holdings and the values. Now, this particular file actually has a Fannie Mae component in it. A very interesting Fannie Mae component, which will be interesting to see, especially with the conversations currently in this industry relating to the client requests as relates to CUSIP numbers. As you will see later in this video, we will go inside parts of the prospectus which have listed on their CUSIP numbers. Now, this is a sample report here. And I will be going over this sample report and showing you the different aspects of the securitization. This particular report with the Fannie Mae component is interesting because there are certain clients and customers, obviously with the curiosity with how a Fannie Mae particular component will affect how a report looks. Now, obviously, you're going to get a certain percentage of you, our clients out there, which are going to have Fannie Mae or Freddie Mac connected to your loan in some capacity. Now, if you have Fannie or Freddie Mac or some other government insured institution, for example, possibly even Ginnie Mae, this is a good sample to view, but also for our other viewers, this is also very good educational material because you will actually see some interesting information as it relates to Fannie Mae and the securitization and the bond. Now, I will be going over this report here and just going here in the first few pages. As you can see with our high quality reports, in the beginning of the report, you're going to see this information here. It's going to list the different borrowers, the addresses, also going over the securitization participants. Obviously, you see the name here. And it's interesting to note that actually this particular trust was a Fannie Mae REMIC type of trust. Now, if you don't know, REMIC is a certain type of classification. It classifies basically like a trust, like let's say there's a Fannie Mae trust, right? Like you could have a regular Fannie Mae trust, like let's say just Fannie Mae Trust 2022-3. Now this one is a REMIC trust. REMIC trusts have certain breaks, tax breaks, and other benefits that relate to the trust. Obviously, these trusts, for example, this one, their high number, I believe this one is about $30 million. We'll see the note later in this video, but around that figure there. When you have high numbers in such a high $1 million range, you're going to obviously, as a trust company or as a company establishing the trust, having a REMIC tax status or having a REMIC attached to the trust gives them certain benefits. Now, that is important to know because in order for them to keep that REMIC tax status active and in good standing, right? So, for example, let's say I have a trust that has a REMIC tax status, right? Obviously, my trust is I'm getting a huge tax break, especially if you're at $30 million, mark, right? My bond is where, let's say, for instance, $30 million, right? Big number. Obviously, I'm saving probably millions of dollars in taxes, or less. But the point is that these are big numbers. So obviously, you as a trust company want to keep that status. Now, if you violate the rules that govern the REMIC procedures, because there are rules here, if for you to have a REMIC benefit on your trust, you have to follow the rules and the procedures. Now, if you violate or you deviate, there's going to be an issue there. Now, could they lose their REMIC tax status? Could there be penalties? Could there be their fines? Can there be audits on them? That's the question you have to ask, right? And of course, that's where the audit comes in, because now you have an audit that shows that this is a REMIC trust. Now, if there is something in this audit that shows that, let's say, for an example, again, this is entertainment, educational purposes only, you have to say that, sorry about that. But let's say, for instance, in this particular file, right? Let's say there is a violation, right? Let's just say, for instance, for example purposes, let's just say. I'm not saying that this is what happened. This is not a claim. This is just an opinion or for a conversation's sake. Let's say, for instance, that this particular loan was not placed in this trust within the 90-day cutoff date, because there are certain procedures, 90-day cutoff. Or let's just say there's a certain particular procedural error. Now, this procedural error has been exposed. And so what does that do? Well, obviously, the REMIC Trust Company does not want that exposed. So could that assist someone in trying to, obtain a certain result? Well, that's the question, right? That is why we do this, to help people to bring about the information, which is we're showing you the information. And if there's a procedural error, well, if that is pointed out and that could help the client, well, more power to the client, to the homeowner, to the people. We are obviously for the people and for the consumer, and we want to see the consumer be treated properly. That's really important. So just keep that in mind as we move forward in this particular sample, as I show you this. Here you're going to see the excerpts, the prospectus entered into the report. Very important. You're going to have this information here. As you can see, big numbers, obviously, as you have the trust there. And it says here, guaranteed REMIC pass-through certificates, as you can see there. Going through here, we're saying seeing the different aspects of the trust, some of the information, some of the analysis there, as you can clearly see. Going through here, and there's links throughout the report as well that you can click, which is also important, because you can click on the links and get even more information, or if you are using this for some research or using this for in some capacity, that will also assist you as well. Now, the important, one of the good aspects of the reports that we produce here is obviously you're going to get the highlighted information in yellow. Now, as you can see here, in this particular paragraph excerpt, right, it's telling you that Fannie Mae buys mortgages from mortgage brokers, banks, and credit unions, which is interesting. Credit unions are a little different, but you see it right here. It says it right there. But as I go on here, which transfers the lending risk from the lending institutions to the entity. Now, as you can see here, it's important. Buying mortgages creates more liquidity for lenders, allowing them to underwrite more mortgages. There you go. The point is for them to underwrite more mortgages. What does that mean? Well, they want to get their funding up. They want to get more loans. They want to increase the volume, right? Lenders, compete with each other, right? There is some people don't realize this, but banks and lenders, that's a market, right? That's an industry. They're competing with each other, right? They're competing in who can write the most loans, who can fund, what type of ratings they have, what type of loans they have. We saw this during the last refi boom, right? Where certain lenders were known for certain things and the type of liquidity and the funding rates, right? Some of them were funding a lot of loans, and we all saw the result of that, which resulted from that. But the point is that, the lending and the banking industry is also a market. It's a business in a sense where they're competing with each other. So here in yellow, as you can see, even after selling the mortgage-backed securities to investors, Fannie Mae continues to own the underlying mortgages. Now, that's important key information to remember there, because this here is saying, again, I am reading this information. I am not making any claims. I'm simply reading this information as a sample report. It's saying that even after they sell it, that's Fannie Mae selling the mortgage-backed securities to investors, that Fannie Mae is actually continues to own it. So you have to keep that in mind there, okay? Here is a really good graph. Obviously, you're seeing the path of the, from Fannie Mae, the deed of trust, to the trust, the MBS trust, the investors, this is very good information to have here, and actually gives you like a 1, 2, 3, very nice looking graph here, technical graph. Here, this is giving you the steps, right? It's telling you step 1, step 2, what happens, step 3, step 4, and you see here, it's giving you the information relating to the custodian, the underwriter, the rating agency, the credit enhancement provider, lender, servicer here, the broker, the issuer, the trustee, the investors, right? Just moving right along here. Now, here is a an excerpt of the prospectus supplement. Again, big number here. Now, if you can see here in the particular table here, if you look, you will see a set of CUSIP numbers. Now, this is going to become important later when we go into the screenshots that then connect to the fidelity, the bond. As you can see here, the CUSIP numbers, there's a whole list of them here. As you can see, there's a whole bunch of them, and they you see they have a different. They start with one figure, but they end it with another 196, as you can see here. I mean, you could see it with the video. Go ahead, feel free to pause and look at that particular section there. But you can see here's a set of CUSIP numbers in the actual prospectus, which is interesting. As you scroll down there, this is technical data. You know, it's showing you basically characteristics of the underlying mortgage loans. You know, subgroups, as you see here. You could see here, there's this is showing you subgroup 3A, 3B, 3C, 3D, 3F, 3G. So there's different subgroups, and it's showing you the balance. This is technical data that relates to the internal workings of the actual securitization trust. And again, links are there, so you can actually click and get further information, which is good because if you're using this report as a, you know, in some capacity, you know, just keep in mind that it's a great document to have, you know, even if you're using it for research purposes or whatever you're using it for. It gives you an opening to so much more information, so much vastness information. There's a lot of do-it-yourselfers out there, a lot of researchers, which is great to see with the internet nowadays. So keep that in mind, that to have this piece of information, how much time you save, how much research you will save, and having a document in your hand that you can use multiple ways. There are so many ways you can use this, and you will have it in your possession. I always like to say multilateral use. I mean, you could use it one way, another way, a different way, you know, and with any different way, you know, any different way people use them with their letters, you know, and other legal capacities. And you know, I know there's a you know, movement going on, you know, with some of the legal stuff people are doing, but again, that's something that, you know, obviously you know, people have to decide obviously on their own. Again, just presenting the information for you here. In this particular section here, this is showing you the MERS investor in the actual database. Now, again, so connecting back to Fannie Mae, as you can see here, the investor, the servicer is a particular company, but the investor is Fannie Mae, which is one of the things we're highlighting in this video to show you and to educate you about Fannie Mae particular type loans or type loans that are insured by Fannie Mae. So again, you see here, this is the MERS website. It's showing it's Fannie Mae. This particular one in the system is active. So if you're doing this, if you want to look up your MERS MIN number, just remember one thing here. You can actually see when you put your MERS MIN number in the database, you can see if it's active or inactive in the right-hand side right here. You see that. So it's important information to note there. And then you can go further and you click, and then it'll show you the investor, which is important information to have, obviously. And we're scrolling down here. Now, this is obviously another key piece of information in this particular presentation. As you can see here, this is the Fannie Mae database. And we come down here, and basically, you know, this is something that will basically says, you know, we found a match, right? So basically, this is a showing you that you know, Fannie Mae, you know, is matched here. So in a sense, you know, what exactly does that mean? Well, that means that Fannie Mae is connected to this particular loan. Now, opinion based, obviously, okay, it says here, Fannie Mae owns the loan. So that's the key piece of information. We found a match, right? So it's indicating as an opinion as ownership of the loan. So keep that in mind as well. Now, this particular section is going over the, in a sense, the procedural issues as it relates to a foreclosure. Now, it says here, Section 3, foreclosure, recorded events on the loan, including foreclosure issues and securitization. Now, you see here, there's a MIN number, it's giving you information. Basically, this particular file didn't have any assignments, so it's important to note that. Because basically, you know, the assignments and the endorsements of the note right? Those are important key pieces of information because, if the note is not endorsed, then that's an issue, obviously, especially if the loan has been securitized. As you will see here shortly in some of the analysis and some of the information internally of the prospectus that actually indicates that. Now, basically, in this particular section, it's giving a summary of some of the key pieces of information in the previous section. Now, if you can see here in red, and before I say that, obviously, if you look in the middle here, it says securitization, and it says the note in parentheses. Now, I will go ahead and read this for you. The note, now that's the mortgage note. That's that like 3 to 5 page document, typically about 3 or 4. That says note at the top, right? That the client homeowner signs at closing, right? So it says here, the note based on the research performed had been sold, transferred, assigned, and securitized into a Fannie Mae trust with the settlement date of this particular date here, okay? Now, if we go further, we see here on the assignments of the deed of trust, no assignment of deed of trust was recorded in the official records. Document must be filed and recorded before a proper foreclosure can proceed, according to this information. While Fannie Mae no longer reports acquisition dates on its website effective in that particular date, well, that's a technical piece of information. An assignment to any servicers instead of Fannie Mae conceals ownership of loan from the homeowner. Now, that's a key piece of information right there. Think about this for a second. An assignment. Now, those of you who are not familiar, an assignment is called the assignment of mortgage or a corporate assignment of mortgage document. It's a document that is filed at the county. Now, this particular document, when it's filed, when we pull title searches or like a title preliminary, many times the homeowner is not aware that these assignments were filed. Obviously, when those are filed, the homeowner is not really notified. So you'd have to pull a title search or like a preliminary title report. We can also do that here if you need that. Just let us know. But that will show the assignments that's on record. So let's say property might have 1 assignment or 2 assignment or maybe five. I've seen files that have 8 or more. I think I saw one that had about 10 or 11, even more than that. So the point is that the key piece of information here is that an assignment that assigns the loan to a servicer instead of Fannie Mae is concealing the ownership of the loan from the homeowner. So that's a key piece of information. See, this right here is information that is brought up, right? In some capacity when there's some back and forth going on. So that's a key piece of information there. Please remember that and keep that in mind. Just moving along here, and this is basically just saying that Fannie Mae there's an indication here that there's some ownership level to the loan from Fannie Mae. Now, basically in this particular section, this particular excerpt is actually the servicing guide from Fannie Mae. Now, they actually have published data that can be found and pulled, which actually outlines how a foreclosure is supposed to be procedurally done on their end. So in a sense, they're telling you, based on their own manual, that this is how a foreclosure needs to be done. Now, if there's deviations from that foreclosure or the foreclosure proceedings are not being followed, well, it's right here in writing. And this is one of the reasons this is placed in our reports, because it shows that, look, you wrote this. You yourself, Fannie Mae, have wrote this. This is your own manual. So think about this moving forward. Now, this here, if you look at the beginning of this particular excerpt of this manual, and this is another key piece of information. And look, and I always like to educate when I'm showing the reports, sample reports, making these presentations and presenting, because you will literally learn by just watching this presentation. Now, this is important. This is keep in mind, this is their manual. This is their official document manual from Fannie Mae. It says it right here. Again, I'm just reading information, and I am not claiming this information. This is for educational purposes only. It says it right here. The servicer must conduct a foreclosure in Fannie's name when Fannie Mae is the mortgagee of record for all mortgage loans. So basically, it's saying that the foreclosure has to be conducted in Fannie Mae's name. Now, if the research and the audit finds out that the foreclosure is not being done in Fannie Mae's name, think about the results of that. It's basically saying that it's an improper foreclosure. It's an improper procedure. Again, this is an opinion, but as you can see here, it is written in their own manual. So that is a key piece of information, as you can see. Now, if you look at the last sentence in the first paragraph, for these mortgage loans, the servicer must request that Fannie Mae reassign the mortgage loan to it so the foreclosure can be completed in the servicer name, okay? So that's just saying, like, basically just going off from the beginning to the middle there. It's just saying, like, in other states, but basically the point is the servicer must conduct a foreclosure in Fannie Mae's name when Fannie Mae is the mortgagee of record. So that's very important key piece of information. Okay, so this is just the rest of the manual. This is something you can pause in the video and you can read if that's you would like to do that. But that's a very particular key piece of information. Okay. This particular section is showing some. This is showing you American, banker as a particular showing this information about, the assignments to the trust, and it's just saying that should be prepared at the time of transfer instead of by bank employees claiming to represent the lender no longer exists. So this has to do with like robo signing and things like that. You can click on those links, or when you receive the report, or just send us a request and we can furnish information on this for you. Yeah, so this particular section here is going over the search, right, of the screenshots, and then giving you a summary here. Okay, and we're just moving right along here. And this is obviously the screenshots. This is something that, obviously has a lot of good technical pieces of information. As you can see here, there's a master QSIP. Some people like to call it the master QSIP number, right? The main one that identifies the security or the bond. As you can see right here, it's right there. This is showing you the balance. You see big numbers here. You're talking in the millions, right? Sometimes in the billions. So we're seeing that. We're seeing the current balance. The original balance looks like the current balance went down a little bit. You're seeing here another key piece of information. Let me zoom in here for you guys. This is important because actually it shows you who the servicer is. Now, mind you, the servicer could be of the trust, right? So this is the issuer, the servicer, the lead manager, the trustee, right? So a lot of people ask out there who the trustee is, who the indentured trustee is. So in this case, the trustee is actually Fannie Mae. So if you look at here, just technical data. Obviously, this is technical data of the trust. Here, again, just more information, showing you this for different balances at different times. So actually this one's showing you actually the balance went higher, as you can see here, a big number. As you can see there, I'll just pause it there for a minute so you guys can take a look, the current and the original balance, obviously. Just more additional screenshots here. Just moving right along. This is the collateral groups. So this has to do with collateral, technical information, the bonds here. This is giving you the bonds balance, and keep in mind, that's telling you here in the millions, right? So the group, so this is 35 million, 208 million, 204 million. So these are some big numbers, bonds balance, group balance. So this is information that is key, right, to the pool levels and It's technical data, but it's something that it's important to have and to look at as well. Basically, this one is showing you the structured finance note screen, the underwriter and the trustee here. You'll have other information here depending on the published data on their end. So just keep that in mind as well. But here you'll typically see the original servicer, originator, seller, insurer, the deal percentages, the asset manager, the swap counterparty, the paying agent. Here you see the lead manager, underwriter, and the trustee. Just the rating history. It's gonna, you typically will show you the ratings of the trust. And this one actually has your balance by geolocation. So this is another interesting part of this particular presentation of the trust. So if this one here actually tells you, okay, in Texas, it looks like here there's 775 loans from Texas that is, securitized or monetized into this particular trust. And it gives you the figure, the balance and the monetary balance there right next to it. So as you can see there, this is by geolocation. So, let's say you are in Texas. Well, there's your figure for that, for looking for the geolocation of the actual the values as it relates to that particular state for this particular trust or bond. Here's just a yield table, as you can see here. It's showing you things like the maturity, the trades, things like that is something that it's good to take some time to look at when you have a moment. And basically here, this is showing the loan classes. So this one here, this one is showing the investment classes. Basically, this one has 100, and you see here on the right side, it says 132 different classes. So there's basically 102 different classes, tranches. So there's 132 basically different types of tranches. Now, this first particular one on the list here, okay, you see this one here, okay, it tells you what group it's in, okay, it tells you the original, it tells you the CPN, and it's sort of the factor CUSIP here, and the tranche description. Now, this particular information here, as we'll see later in this report, when it's put into Fidelity, the securities bond / bonds is revealed. The trust name is revealed. So you're literally learning something here as to how to actually pinpoint a trust or a bond as it relates to a particular loan based on the research. So that's why it's highlighted in red here. And we scroll down, we're just looking at some more technical data, more of the other classes here. Again, more classes. So you see these are all CUSIPs, factor CUSIP numbers. Again, factor CUSIP numbers. And then here, basically showing you the investment, Fidelity Investment Search result for that particular CUSIP that you saw in the previous screen. And guess what? It's an investment bond. So, all this information has been uncovered and revealed now. And if you go on there and you, put this particular CUSIP number, that's what you're going to see there. And this is the particular, the trust name. This is the trust name, as you can see. Original issue amount about 30 million, it shows here. Yeah, so this is very crucial information. So literally, throughout this video, obviously there's research that goes into it. Obviously there's a lot of technical information, but as you can see here, the flow of the research, how the research is done, very important how it's presented and how it comes down to this screen, very important, crucial information. So as you go about, whatever you're doing in your capacity and whatever you're pursuing, please keep in mind that this particular audit report serves many different purposes. Not only is it something that, can be used in some capacity, whether that be, whatever type of, remedies people are pursuing or, different type of negotiations in whatever capacity. But, importantly as well, as a research tool, you have a report in front of you That is literally a research tool. You have it right in front of you, and you can go through this information yourself and find other information and click on information, look at the CUSIP, the ISIN number in some cases, and look at the bond values, see how much holdings there are, see how many, depending on the published data, how many in your state is securitized into this particular trust. Hey, maybe it's your neighbors has a loan in there too, right? Like you saw earlier with the Texas. Of course, that's for example, but that's what I mean. It's a research tool. So you are literally having a crucial, advanced piece of research in front of you that can open the door for many other things that you're going to do. And you have a report in front of you. It's your report. You have it saved. You have it now. You are in possession of it. And you can use it multilaterally. You can use it in different ways. You can use it down the line. You can use it short term, long term. It's up to you, really. Use it multiple times. Use it, as many times as you want. So keep that in mind. Our vision is to give you something, to give you a quality, the best set of reports in the industry. With our premium packages, you get a full set of reports. We're known for that, to give you a full set, a full breakdown. You get multiple reports, 5, 6 different reports, the main one being this one. And then there's another main one as well with the premium packages we offer. But the point being is that, understand that you have a piece of information that you can use many different ways. And you literally are moving 3D. Now you're learning. Now you are obtaining more information. You're sharing the report. You're learning from others. Now you're on the path, to your success. So just keep that in mind moving forward. Obviously, I enjoy presenting this information to you guys because I always try to take a teaching approach. Obviously, we love educating. We give away free educational material. That's our vision with our company, and pretty much everything we do. Basically, just going at the end here, obviously, this is some of the closing information relates to the securitization. Feel free to pause and look at it. But that's really one of the main things, is you do have a piece of information here. So basically, one last thing going over this report is basically this here is basically saying, relating to the foreclosure. So basically, of the opinion that, okay, the foreclosure action is probably not the most proper foreclosure. Basically, here it says, well, I was reading the report. All documents basically should be, rescinded and then notarized assignment of deed for equivalent value with verifiable proof of funds and note endorsement executed prior to Fannie Mae acquisition should be recorded for right for foreclosure to proceed in validating the real parties in interest and in compliance with Texas Uniform Commercial Code. This is obviously citing a specific to this particular state, but that's important because it's saying here the foreclosure action dependent upon a valid assignment deed of trust. So basically counteracting the foreclosure, saying, look, of the opinion of that the foreclosure is improper in a sense. Also, the note endorsement arguments, obviously, is one of the big ones as well, where it's basically, look, if the note is not endorsed, right, then there's a question. There's a question because if you look up securitization procedures and laws, and it's written, there that basically, when the loan is securitized, that there's supposed to be an endorsement on the note, right? Because when the note is sold, kind of how you endorse a check. So when that note is sold and there's no endorsement, right? Well, then where is the proper record of it being sold if there's no endorsement? So that's one of the main arguments, that can be used, among others. But that's a very important piece of information, and that's one of the things that should be also kept in mind as well. But yeah, please feel free to contact us if you have any questions or comments. Thank you so much for watching the video up to now. And definitely we look forward to helping you in any way we can. Please let us know if there's any way we can help you. Thank you and have a wonderful day.